Big changes took place last week in the foreign exchange markets, with one of the biggest changes coming in the pound, which suffered its worst week in over a year. And this was a 2 standard deviation sell-off, which usually signals the start of a new trend. But that's not the only key thing we need to pay attention to next week, because last week also saw hotter than expected inflation starting to show up in headline and also in wholesale inflation figures in the US, driven of course by the recent rally in crude oil. And this bullish fundamental catalyst looks to have kick-started the next move up in the US dollar. So for those of you watching the video for the first time, my name is John Fortune. I've been trading financial markets for over 18 years. And in today's video, I'm going to share with you my trading plan for next week, including but not limited to the quantitative buy and sell zones for those pound short opportunities and also dollar long opportunities, which are looking fantastic heading into next week. So if we pull up the US dollar here, you can see, I want to draw your attention first to the monthly chart over here. This is the channel we've been in all the way back to the great financial crisis and the recovery in the US dollar. And we're sitting at the bottom of this channel in this range. But more importantly, when you have these kind of multi-month ranges, you tend to need a fundamental catalyst to really break them. And it looks like we are now starting to get that, as the rally in crude oil is starting to feed through into inflation in the official data. And of course, as we saw last week with the inflation data, this is now driving the US dollar higher. So if we can break out above the 100.257, the next port of call is this kind of descending channel, which is up around the 107. But just purely heading into next week, you can see we've started to break out. We're starting to turn up in the moving averages. I would be looking for a pullback, consolidation, perhaps even a retest of this high, and then a continuation up to the range high, the 100.257 in the near term. So what I'm going to be primarily interested in is looking for some dollar weakness next week. And as we go through the charts in today's video, you will see I'm going to be looking for these to pull back into the buy zones in terms of US dollar long. And I'm going to be looking to buy dips for the next leg up. And of course, I will personally be looking for 1 or 2 days. That's what we're looking for in real time with members every single week. 1 or 2 days worth of profit target. That is, generally speaking, as much as you can kind of expect to pull out of a week, because you've only got 5 trading days. If you get more than that, then you've really had a really good return on any individual trade. So as we go through the dollar pairs in today's video, I am going to be focused primarily on long US dollar opportunities. Okay, so let's have a look at the portfolio selection and the quantitative data. So normally we're looking for the top 3 currencies really and the bottom 3 currencies to pair against each other going into the following week. The Australian dollar is still the #1 long. We do have the US dollar now at number 2. Now, if you remember, quantitatively, the dollar's been quite weak. And then last week we get that fundamental data coming out. It drives that reversal, and now we're starting to see the US dollar turn bullish in the quantitative analytics for the first time in quite a while. So we are going to be focused on US dollar longs, Aussie longs, and alongside that, the Swiss franc is the 3rd currency to the long side. Now, it's not quite as good as the Aussie or the US dollar, but on a relative basis, I am going to be looking at, and we will be looking at in today's video, Swiss franc long opportunities. And to the short side, and probably the #1 theme going into next week, is the pound. And the reason why the pound is probably my top theme going into next week, so pound shorts, is because we do have the instability around a potential leadership challenge in the UK. And that's not going to be resolved anytime soon. There needs to be a by-election. And then if the challenger wins the by-election, they're going to have to challenge for the party leadership. So this could actually go on for quite a while. And fundamentally, pound weakness is likely to stay for the foreseeable future. And quantitatively last week, we had a 2 standard deviation sell-off. And that usually signals a trend change. And actually, we should expect further weakness in the pound. So pound shorts are my #1 short theme, followed by the euro to the short side. We could look at the Japanese yen, because the Japanese yen is still weak. The problem is, if we short the yen and the BOJ intervene, then we're going to be on the wrong side of BOJ intervention. So heading into next week, I prefer to look and focus on CAD shorts. So we're going to be looking in today's video at all of the dollar pairs, of course, Bitcoin, Ethereum, gold, silver, but also we're going to look at pound Aussie to the downside. We're going to look at pound dollar to the downside, pound franc to the downside. We're also going to be looking at Euro Aussie to the short side, Euro dollar to the short side, Euro franc to the short side. And we're also going to look at Aussie CAD to the upside, US dollar CAD to the upside, and CAD franc to the downside. And remember guys, if you enjoy these videos or you feel you get any value at all out of them, be sure to like, share, and especially to subscribe. And if you're on mobile, you can also hype the videos. That really helps the channel when you do that. And a big thank you as always to everybody who has subscribed to the channel so far and who likes and shares this content on a regular basis. Kicking off the US dollar pairs then with euro dollar. And what you can see here is the combination of technicals and fundamentals, because technically speaking, we failed to make a new high. We pulled back, we attempted to make a new high and we failed right here. We pulled back and we attempted to make a new high and we failed again. Now, the reason this is technically significant is because when you have a failure to make a new high, this is the first sign of a trend change. If a market is going to change the direction of a trend, the first thing it does is fails to make a new high. And the subsequent breakdown often translates into a new sell-off or trend to the downside. And many of you will already know this, likely as a kind of third wave. That's what it's called. It's the most impulsive. And what you can see here is when you have this kind of double failure to make a high, now we've broken down below this low. This is likely technically going into a third wave to the downside because you have your one, your two, your failure to make a high. And as you break the low, what happens is all the traders who have been buying down here, they have stop losses. And as they get liquidated, they pull their positions and this causes a strong sell-off. Now, the problem here is we also have a secondary and much larger kind of potential third wave breakout down here. So you break out down here, you pull back, and then you break here and you get that bigger breakdown. So when we have this kind of mini pattern and then a major pattern, this I like to call this kind of cascading effect. This is how you can get much bigger trend changes, because you have a breakdown of this and then a breakdown and it just causes a much bigger reversal. Now, normally to get that, you need a fundamental catalyst. Do we have that? Yes, we have this reacceleration of inflation caused by the moving crude oil. And we're getting this breakout with a fundamental catalyst. So very simply put, going into next week, what I'd like to see is a pullback into the sell zone. So the sell zone is between these two levels and the buy zone quantitatively is between these two levels in each of the markets. And again, this is where we turn oversold or overbought during the week. So if I'm looking to be short euro dollar, what I want to see is I want to see it push up and turn overbought. That gives me a fantastic opportunity. In this case, what we would call a rip, where it rips higher and then it starts to flip lower from the moving average. Notice how the moving average is in the sell zone. That shows it's pulling away from the moving average. This is a market which is starting to trend to the downside. So I'm going to be looking for this rip higher and a flip from the sell zone next week. Again, rip and flip is a setup that we cover in the free strategy guide. You can download that in the pinned comment and description below. If I pull up euro dollar on the multi-charts here, look at this on the weekly. Look at that really nice weekly candle. Yes, we're kind of still above the 50 period moving average, but look at this. You can see this consolidation and look at it. Now we're breaking out. Now we're starting to move away and we're doing it with a fundamental catalyst. So any kind of pullback in this area right here, this is where we have the sell zone at 1.17196. I'm going to be looking for this move into here, and this is where I'm going to be looking for a 1 or 2 day reversal. If we do get this, there is actually a good chance this marks the top for the next swing low. So you can actually swing trade these as well. But for me personally, like I said, I usually look for 1 to 2 days worth of return on each trade that I'm taking. So euro dollar to the short side is high up on my watch list next week. Next is pound dollar. Now this is also very high up on my watch list for a potential short opportunity next week. And look at the sell-off that we had here. Now notice something else here with pound dollar. Quantitatively, we're oversold on a rolling daily basis. This is actually a Monday, Tuesday reversal play. So again, this is a setup from the free strategy guide below. But what this basically means is when you have heavy selling or strong buying into the end of the week and you don't get a kind of reversal, you tend to see the reversal, statistically speaking, for 1 to 2 days the following Monday or Tuesday. Sometimes it can go into Wednesday, but very often it's Monday to Tuesday. So there's two things I'm actually looking for here heading into next week. I do anticipate a pullback for 1 or 2 days first because we are oversold, but this would be most likely a kind of one wave. Then you get the two wave like this. And what I like about this, there's a really nice key of resistance here. You can see it's tested as support here. And this sits right at the sell zone starting at the 1.3463 next week. So what I'm going to be looking for is, especially if, on Monday or Tuesday, you get a pop down like this, that's a really good opportunity to start to look for that Monday, Tuesday reversal. You don't have to do that because it is counter trend, you know, in pound dollar. I'm actually looking for shorts. So you can just wait for the Monday, Tuesday reversal and then use that as it pulls back to start to look for a short opportunity. Again, I would look for a short-term 1 or 2 days reversal, but look at this here. Pulls back, bounces, fails to make a high, and now we kind of break down this almost double top pattern here. And so again, this to me is looking like a 1, pull back for a 2 into the moving average, and then third wave down. So usually when you get this failure to make a high like this, at the very least, you would anticipate it coming down to these lows, because then it turns into a, you know, is it an A, B, and a C like this, which is a continuation pattern, or is it a 1, 2, and a 3, which is a reversal pattern to the downside? Well, in either case, it comes down to here, doesn't it? Because either it holds here and then you get the continuation, or it fails there and you get the third wave. Now, the fundamentals are actually double negative for pound dollar, because we just looked at that bullish fundamental catalyst for the dollar, which is inflation coming out, crude oil going up. And we also have a bearish catalyst for the pound. So this is really at the top of my list for a short heading into next week. So I'd like to see it pull back into this area. This is where I'm going to be looking for a 1 or 2 day reversal. If you want to try and swing trade it, hold on to it for longer, then of course you can do that. But the longer you hold for bigger returns, the lower your overall win rate will be, and that will increase drawdown, etc. So it's always a trade-off, you know, whatever you guys prefer. But for me, 1 or 2 days from this area is what I'll be looking for next week. Next is US dollar yen. Now, US dollar yen does actually present us with a bit of a problem heading into next week, because when we go and look at the multi-charts in a second, you'll see it's setting up for a major breakout to the upside. So, you know, we would really, generally speaking, be wanting to look to be buyers in this market. But obviously, the problem with that is we have the BOJ intervening, and especially once we get to the 160, 161 area, the BOJ are likely to intervene again. So if this pushes up and we look for a short, we can kind of be involved around the same area that we can get BOJ intervention. But the problem with this market is if we short it somewhere at the highs here and the BOJ don't intervene straight away, I mean, we could see this start to run away a little bit, you know, and then we're on the wrong side of a much bigger breakout to the upside. So it's really not an easy market to trade right now. And you can see this more clearly on the multi-charts. You know, this is the kind of high we'd be looking to short from the sell zone. But look at it right here. I mean, this is a monthly consolidation, and we'd be breaking right above the highs, which is where the next leg could start. So it's kind of like a really good bullish breakout setup, but at the same time, the BOJ probably won't allow it. So if you wanted to kind of take on that risk of shorting the highs in the sell zone next week and just kind of waiting for the BOJ to intervene so you could be right, then of course, you know, the problem is if it goes up to 161, 161.50 before they intervene, it may be the case that you end up taking a bigger loss before they actually intervene. So very tricky market to trade. And the problem is, of course, if we start to buy this market or we buy dips and the BOJ intervenes, then we're on the wrong side of BOJ intervention. So not one of the best markets. I'm most likely going to leave US dollar yen next week. Next is US dollar CAD. Now, I do like US dollar CAD to the upside. This is pretty high on my watch list for next week. We looked at this in the portfolio selection: long US dollar, short Canadian dollar. And the buy zone starts at the 1.3671. And what I'm going to be looking for is any pullback. And again, notice how the moving average is actually sitting in the buy zone. That again shows real momentum, because if you have a neutral market, what you see is the moving average tends to be in the middle, and then you're kind of range trading around the moving average. But when you start to pull away and the moving average is down here, or from the top side like this and the moving average is in the sell zone, that shows you're kind of looking at a trending market, a market with momentum, and you want to be buying dips, not range trading it. So any pullback towards the 1.36719 is where I'm going to be looking for a pullback into the moving average, this kind of dip and flip setup. Again, in the strategy guide. And if you look at this on the multi-charts, what I like about this as well is we have a really nice key area of support just here. And this key area of support in the 4 hours is last week's low. So it's an if-then process. I'm looking to be long this market. What I want to see is I want to see it sell off first, because then I can make the claim that those who are shorting this market are most likely making a mistake. And if that's the case, in all probability, I want to take the other side of that trade, especially if they push this market. So this is a market that we're looking to be long overall. They push this market down into oversold territory. So now the market's at risk of bouncing anyway. They then attempt to break it through last week's low, this is where you start to stack the odds for a failed breakout. And when that happens, you know, they pull their positions, that's where you see the liquidation. So that's what I'm going to be looking for specifically in US dollar CAD next week. If we take out the 1.3648, I'm going to be looking to be a buyer. I'm going to be looking for shorts to cover their positions for a 1 or 2 day liquidation to the upside. USD-CHF. Now this is an interesting market going into next week because this is a market where we could actually trade this both ways. Yes, we're looking at being long US dollars, but the Swiss franc, as we saw in the portfolio selection, is also a strong currency. And so when you have two strong currencies, you can actually range trade them because you should expect a lack of direction and they should hold their range. Now, what I like about this is, and notice how the moving average is actually more in between the buy and sell zones. Again, that's an indication that actually there's not as much momentum in here to the upside as we saw, you know, to the downside in pound dollar or to the upside in US dollar CAD. So if we get, again, if we get, I'm looking to be reactive. I'm not trying to predict the future here. I'm looking to be reactive. If we get this pullback into the buy zone, we have a really nice ascending trend line below the 0.7797. This is where I will consider looking for a bounce for 1 or 2 days back inside the range. And also, if we get this market pushing up above the 0.79441, then I will also consider a potential short for 1 or 2 days from this area as well. So that's why I like US dollar franc, because if I want to buy dollars, but the dollar just rips higher, it may be the case that actually, you know, I have to short the dollar versus other stronger currencies rather than buy the dollar versus other weaker currencies next week. And if we jump over to the multi-charts, you can see on balance, this is a market that is actually still pretty weak. I mean, we're still below the 9 EMA in the monthly time horizon. So that would give me the confidence to short the US dollar, you know, versus the Swiss franc if that was what came into play next week. So any push up into the 0.79611. And if I just scroll out here on the 4 hours, you can see this is a really nice 4-hour support just here. So push into this area. I'll be looking for a rejection potentially from the 0.79611. NzdUsd, this is a market I really like going into next week. Why? I'm looking for short opportunities based on the portfolio selection. And we have a potential head and shoulders pattern here. So a really nice left shoulder in the daily, puts in the head, liquidates, and now any pullback to the left shoulder is actually right in the sell zone next week, which starts at the 0.5915. So this is really why we look at multiple markets in the Saturday video rather than just a few narrow pairs, because we never know 100% what's going to happen in the future. We don't actually want to place the burden of trying to predict the future, which is impossible, on our shoulders. We want to make an assessment of what's probable, and then we have a spread of markets, and when the markets come into play, which we're planning for and prepping for, then we can pull the trigger during the week. And again, this is not theory, guys. We do this day in and day out with members every single day at GMT. So if I pull this up on the multi-charts, again, look at this really nice reversal week down here. We're inside this monthly wedge pattern. We're just kind of chopping around. But it's this sell-off, this liquidation that really gives me the confidence. If we can pull back and we start to retest these weekly highs over here, this is where I'm going to be looking for a short above the 0.59152. And I'm going to be looking for a 1 or 2 day reversal, but I've put this on here like this because I do think that this, you know, head and shoulders here, as we know, as a reversal pattern, if it breaks this low, it's going to kickstart the bigger move down. And this fits in with everything we've looked at in pound dollar, euro dollar, and even the DXY breakout to the upside. AUD-USD, now this is actually also giving me the chance, very much like US dollar franc, to trade the dollar both ways. Why? Because yes, the dollar is a strong and emerging currency based on that inflation data, but the Aussie is also strong. And so if we get, in fact, the Aussie quantitatively is stronger than the US dollar. And so if we get this pullback into the buy zone, the 0.7066 is where I will be looking for a potential buy the dip opportunity in Aussie dollar next week. I don't want to short this because this is right at the highs. And this is a currency, again, I would be looking at as a plan B kind of currency pair. So in other words, I'm looking to be long the dollar. I want to trade pound dollar, euro dollar, US dollar CAD primarily. But if the dollar starts to really strengthen and the opportunity is to actually sell the dollar, then I can pivot to Aussie dollar, which is stronger than the US dollar, and also US dollar Swiss franc. So again, we should get opportunities regardless of whether the dollar strengthens or weakens significantly next week. And look at this in the multi-charts here. It was an inside week, where the US dollar actually appreciated, a number of these currencies collapsed. The Australian dollar didn't. Yes, it did underperform the US dollar, but it underperformed the US dollar less than other currencies. So if you'd been long Aussie dollar and you're on the wrong side of this, you'd actually be on the wrong side of this much less than other currencies. So what we're seeing here is some real relative strength here for the Australian dollar, and it's why Aussie long is also a top theme going into next week in my trading plan. And when we look at the non-US dollar pairs shortly, you'll see a bunch of these are around Australian dollar long opportunities. Okay, so let's have a look at Bitcoin and Ethereum before we move on to the non-US dollar Forex pairs, which are showing really good opportunities heading into next week. Now, Bitcoin has traded into the monthly moving averages here, and we were kind of talking about this previously, how it's kind of in no man's land because overall we have this big bear flag. So the next best opportunity is likely to be to the downside. But in the near term, we were actually kind of grinding higher. We broke above the inside candle high, and that did kickstart the move up to the prior low, which we've also been talking about in previous videos right here. So all we've really got now, if you look at this in the weekly time horizon, is a bear flag, another bear flag, and a stair step back into the prior low. Now, with inflation picking up and with the US dollar rallying, this is deflationary, this is risk off, and this is going to put downward pressure on cryptocurrencies. And although we are still above the inside month candle high, I do anticipate this being the major turning point in Bitcoin. We are not just at the stair step low, we are also at the top of this channel right here. So the safest place to start to look for a bigger short opportunity would be back down below the kind of daily 50 period moving average. But in the short term, you can see we're below the 50 period moving average in 4 hours, and we're likely coming down to the 76.69, or you could say the 76,700, which is the daily 50 period moving average. So we crossed it in the 4 hours and now making our way down to the 76,700. And I would suggest we're coming down to the 76 level, which is a retest of this here. So this would be the next kind of place I'd be looking for in Bitcoin. You can see we come back, we retest the inside candle high, then we'll probably see it bouncing around, and then the next opportunity would be a breakdown and a move back down to the channel low. So those are the two things I'd be looking for going into next week. A pullback in this area towards the 50 period moving average in the 4 hours. Then I would be looking for the move down to the 76,000. I would anticipate buys stepping back in here because this is where they bought last time. It ultimately fails, liquidates down, and then you start to look for the move between here down to the channel low, this kind of space. So we're kind of creating a workspace here. And the workspace is between here and the 76,000, and then below the 76,000, you can say roughly to 72,000. I think Ethereum, which we're going to look at now, is actually setting up nicer to the downside than Bitcoin. So if we pull up Ethereum, we've been talking about in previous videos how this is relatively a weaker market than Bitcoin. And again, last month we had this kind of tight bodied month, but also we took out the high. You can see this, we took out the high and we failed. So unlike Bitcoin, we had the inside month in both. Bitcoin broke through, pulled back, retested the underside of the prior sell-off, whereas Ethereum couldn't even do that. It couldn't even break through the high of the inside candle here. So what this is telling me is that we're most likely setting up for a move back down to last month's low. And that's at the 2000, just above the 2000 level. So before we get there, we also have the up channel. So the more conservative target I would look for is a pullback towards the 2252, because this is the range breakout we're seeing now in Ethereum, bit of a descending triangle almost. And there's lots and lots and lots of space down towards, the 2050 area at least, which is the bottom of this up channel going all the way back to February. So that's the opportunity I'd be looking for now in Ethereum. Now we've finally broken out of this choppy range, I would be interested in those shorts to the downside. We're kind of out of no man's land and we're starting this leg down. Okay, so let's look at the non-US dollar Forex pairs setting up really nicely heading into next week. And Pound Aussie is one of the top ones. This is a market that I would consider to be setting up a potential 5-star opportunity. Why? because we have a very weak pound and a strong Australian dollar. In fact, they're the #1 short theme and the #1 long theme heading into next week. So pound Aussie to the downside is a no-brainer. I can only short this market. I cannot buy this market under any circumstances. We have this descending triangle breakout. And you can see again, look at the moving average kind of sitting in the sell zone. This really shows any pullback is a rip higher, and it should be treated as a kind of sell the rip opportunity. So I'm looking for a pullback into the sell zone, and look at how the sell zone actually sits at the underside of that descending triangle. So the sell zone is at the 1.8809, and a move up into this area next week is going to provide a fantastic opportunity to look for a 1 or 2 day reversal to the downside. And look at this setup on the multi-charts here. This is where we have that kind of range, and we pull back. It's also a descending channel right at that area. So the descending channel all the way down here sits here. We've got portfolio selection. We've got horizontal support. We've got the sell zone, so it's overbought during the week. We then have the descending triangle, and we also have, if you look at this on the daily time frame, we've got that 20 period moving average. So now we've got dynamic support. So we really have all the key areas of confluence around the 1.88094. So if this market turns overbought next week, I am for sure going to be looking for a 1 or 2 day reversal to the downside at least. GbpChf, this is a market that I really like heading into next week as well. Looking for a pullback into the sell zone, and there's a really nice kind of third touch of the trend line set up here as well. So the sell zone is at the 1.0569, and that is what I want to see. First and foremost, I need to see these markets turning overbought or oversold. That is what really brings a market into play, and then I'm looking at the other things for confluence. And if we pull up the multi-charts here, look at this candle. Look at this weekly candle. So what I'm really looking for is any kind of pullback into this area. What you tend to see is the weekly candle starts to push up, and then as you get that reversal, it ends up basically being the wick. So it turns overbought during the week, and that can very often end up being the wick of the weekly candle. And then it stops somewhere here, and then you get the follow through candle. So it kind of pulls back, tests, and then you can get the follow through the following week. Either way, I can only be short this market, cannot buy this market next week under any circumstances. EurAud, this is a really nice setup heading into next week as well. The sell zone starts at the 1.6383, and there's a really nice daily resistance area right here. So again, looking to be generally short the euro, long the Aussie. This kind of pullback into the sell zone is going to set up a great 1 or 2 day opportunity for reversal. And look at the moving average. This would actually be a range type opportunity. So essentially we'd be looking for this to push up, hit the key area of resistance, and then it would range back down towards its moving average. So this is what it looks like in the multi-charts. You can see really nice opportunity if we're breaking above the 50 period moving average into the sell zone. And it's this high right here, this daily level. And it's also sitting at the daily 50 period moving average. So that is going to be a really nice opportunity to sell any kind of push higher in Euro Aussie next week. Next is Euro Franc. Now what I want to see in Euro Franc is a push higher above the moving average. And I'd be looking for this to enter the sell zone above the 0.91981. This is where I'm going to be looking for a 1 or 2 day reversal back towards the moving average. There isn't really a clear, there's nothing but air kind of between here with this candle. But when we jump over to the multi-charts, you'll see there is a little bit of resistance right here we could use. So you can see the sell zone starts here at the 0.91980. If we can push through here, it would be this high over here. Notice how we pushed up in the 4 hours and we kind of formed a bit of a range before breaking through. The 0.9215 is where I'll be looking for a potential failed breakout, because we're now overbought during the week and traders are trying to break this out. That's where you can see failure and liquidation. So that's what I'm going to be looking for a 1 or 2 day reversal in real time with members next week. So the final two pairs we're going to look at before we move on to gold and silver are in the Australian dollar long theme. So that's basically the theme is being long the Australian dollar, and it can be against, any other currency. But what I'd like to see here is I'd like to see Aussie CAD sell off really nice daily support levels in the buy zone. Those are some of the best setups when you have daily resistance or support levels just inside the buy and sell zones. Really, really good opportunities. Notice how the moving average is in the middle. So again, it's kind of a range. We're looking to buy the bottom of a range in a market which overall is going up. So it kind of pauses, consolidates, goes up, pauses, consolidates, going up. So we're kind of buying here, 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 down here. This is where we're kind of buying. So yes, we're looking for that 1 or 2 day bounce towards the moving average, but that also could be the next leg up if you're looking to swing trade it. Again, for me, I'm looking for 1 or 2 days. And you can see this quite clearly on the multi-charts here. We've got this kind of reversal, but we're still trending to the upside. It's still pretty strong. And any pullback into this daily support, into the buy zone below the 0.97435, is also going to be a bounce trade from the 50 period moving average. So really nice setup in AussieCAD. If we can get that pullback, then I'm going to be looking to pull the trigger on a long opportunity. CAD, CHF, this is the final pair before we move on to gold and silver. And I do again really like this. So we're back into that theme of being short the Canadian dollar, long the Swiss franc, which is what we looked at in the portfolio selection. This is a market though that's kind of ranging. So you can see the CAD is not as weak as the euro and the pound. Those are the weakest currencies that I want to short. But we can trade in the direction of a trend with strong and weak markets, but we can also range trade 2 weak markets against each other or 2 strong markets. So what I'd like to see is this to push back into the range high. And you can see it's ranging because of the moving average here. And I would be looking for a potential short at the range high here, the 0.5789, after it turns overbought during the week above the 0.5772. And this is where I'd look for a failed breakout and a 1 or 2 day reversal back down towards the middle of the range and back down towards the moving average. So I can only be short this market. I cannot buy this market next week. And if we pull up the multi-charts here, you can see what I really like about this is overall in the monthly, we are still trending to the downside. But if we can push up, it's not just a daily resistance area. It's actually also now a weekly swing high or a weekly resistance area. So this would be a really nice place, and we would probably test the weekly 50 period moving average. So again, it would become a 50 period moving average kind of bounce opportunity as well. So really like this opportunity in CAD franc if we can turn overbought and take out the daily resistance and the weekly resistance at 0.57899 next week. Okay, so let's have a look at crude oil before we move on to gold and silver, because crude oil is really driving the flows in financial markets right now. And this is setting up a big high tight flag pattern, and I'll show you exactly what that looks like on the multi-charts in a moment. But the quantitative data is showing us the buy zone at the 93.51, and this actually sits at the bottom of this kind of flag pattern or this pennant as it's currently forming. So I can only be a buyer of this market. I cannot sell this market under any circumstances. I think we're about 2 weeks away from a major bullish technical pattern forming. And so I would only be interested in buying the dip down below the 93.51 and into this kind of lower trend line in crude oil next week. So look at this pattern on the multi-charts here. You can see we're consolidating around the 50 period moving average in the daily. And what we're doing is we're starting to form higher lows, and we're kind of tightening and coiling as we form lower highs. Now, why do I say that we're probably 2 weeks away from this pattern forming? So I don't anticipate this actually going anywhere until at least next month. Well, because on the monthly time horizon, we have the big flag, and then we've got the inside month, and now it looks like we're forming a second inside month. That's what gives you that kind of high tight flag pattern on the daily time horizon here. So once we form that, this market is at significant risk of exploding to the upside. If that happens, the dollar is going to also ramp higher. That's going to bring risk off into equities, etc., etc. So this is really the key market, but I don't anticipate it breaking out to the upside in any significant way this month. Okay, so wrapping up the video with gold and silver. Now we are starting to see things moving in gold and silver after really a lackluster period of around 6 weeks. And both gold and silver going into next week, as far as I'm concerned, have a bearish bias. Why? Because we're starting to see inflation picking up a reacceleration in the dollar, and this is going to be a headwind for gold and silver. Gold and silver tend to outperform the best when the dollar is going down. As the dollar's been selling off recently, we've seen gold really outperforming. So now the dollar is looking like it's setting to break higher. This is going to put downward pressure on gold and silver. So going into next week, I have a bearish bias on gold and silver. We do have the sell zone at the 4682.66. And this is also sitting right at this kind of descending channel in gold. Now, if we pull up the multi-charts, you can see this was the inside month in gold, and I have a green breakout level here and a red breakout level here. Because whilst we're inside last month's candle, we're kind of stuck in no man's land. But we are now on the verge of breaking down, especially with this kind of bullish dollar catalyst, below the 4,510. And what this is going to set up is a run down to the 4,226.51, which is the weekly 50-period moving average. So I anticipate a breakdown below, and look at this weekly candle last week, a breakdown below last month's low. You know, we might actually pull back first. If we pull back into the sell zone, then you could look for that kind of mean reversion trade back down. But the breakout to the downside would be below last month's low, the 4,510. And once you start to clear that out, I'd be looking for a pullback again towards the 50-period moving average in the 4 hours and a run down to the 50-period moving average in the weekly. Why? Because we've already closed and actually started to trade below the 20-period moving average here. So you see we come up, we kind of get loose, and now we're most likely making our way down to the 50-period because we've already lost the 20-period moving average here. So that's what I see in gold, and all of that technically makes sense with a dollar bullish bias heading into next week. And last but not least, we have silver. Now, silver did make an attempt to break out above the inside month, and it's failed. This liquidation has coincided with that rally in the dollar. And so what's really nice about this potential setup is the sell zone is at the 81.50 roughly, and we have the high of the inside candle month, which we had this failed breakout, sitting as a potential left shoulder. So we pull back into this area. This would actually set up this kind of breakout, head, failure, pull back, retest the breakout point, that becomes the right shoulder. So I do think we're coming now. Now we failed at the inside month high. I do think we're coming down to the 69,780, which is the inside month low. And once we get below the 69,780, again, this is going to set up a move back down to the range low at the 64.07. So I would primarily be looking for this pullback, a test, and a move back down in silver. That's the opportunity I would be primarily looking for next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.